Has Netflix finally gotten its groove back? I was eagerly anticipating their quarter last night because the stock had been making kind of a comeback after spending most of the year lost in the wilderness. And this time, they sure didn't disappoint. When we pulled the data for the best performers of the third quarter, remember that last week? I was shocked to see Netflix as the #2 name in the NASDAQ 100, with a 34% gain during the period. Of course, before the rebound, the stock had plunged from $700 last November to $160 at its low this spring, in part because the market turned against it, all things growth, but also because they had experienced what I have to regard as a dramatic slowdown. You know, I like these guys. A few months ago, Netflix started rebounding from its lows, and the rebound accelerated when we started hearing talk of a new, cheaper, ad-supported subscription tier. Normally, I'm hesitant to get behind stocks that have rallied hard going into earnings because that kind of hype sets you up for failure. But this time, Netflix delivered a spectacular set of numbers that sent the stock up 13%. I expected the quarter to be a positive catalyst, but it's just not up 13% for heaven's sake. So tonight, I've got to walk you through this because this is really important. I want to show you how Netflix pulled this off after being written off and left for dead earlier this year. It wasn't long ago that this stock really did look like roadkill. Yet now it looks alive and well, and I think the news is terrific because I've always loved this management team, their creativity, and, of course, their products. Before we get into the comeback, you need to remember what went wrong here. And just so the stock got hit by what I talked about all at the top of the show, the rotation out of high-growth stocks after the Fed declared war on inflation last November. Now, at its peak, the stock sold for 62 times earnings, making it exactly the kind of richly valued growth name that's been totally toxic this year. Didn't help that Netflix was widely perceived as a COVID winner, something you do when you're all cooped up at home, and those things all went out of style once people felt safe going outside again. Then in January, Netflix gave us a truly horrific subscriber forecast, talking about adding 2.5 million subs in the next quarter when Wall Street was looking for 5.8 million. That's disappointing. The rest of the guidance was awful, too. That's the kiss of death for a stock, and it only got worse when Netflix reported a truly ugly quarter in April. Forget about adding 2.5 million subscribers. They actually lost 200,000. And then management guided for another quarter of losing eyeballs, this time predicting 2 million subscriber losses. Analysts thought they'd be up 2.5 million.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.